Welcome to Phillip Futures Market Watch. My name is Sheng, and for today's Market Watch, we'll be looking at the outlook of US dollar. After nearly a decade of an extremely accommodative monetary policy, the Federal Reserve Committee, as anticipated, approved a quarter-point increase in its target funds rate. This was the first time that the Fed raised rates since 2006. The Fed Committee post-meeting statement release mentioned that given the economic outlook and recognizing the time it takes for the policy action to affect future economic outcomes, the Fed Committee decided to raise the target range for the federal fund rates to 0.25% to 0.5%. In addition, the Federal Reserve Committee emphasized that the stance of monetary policy remains accommodative even after this increase to support further improvement in labor market conditions and a return to 2% inflation. The Federal Reserve Committee raised interest rate as a vote of confidence in the strength of an expanding US economy. The US labor market has improved considerably since the post-2008 financial crisis, with the unemployment rate declining to record low of 5%. In addition, household spending, business fixed investment, and housing sector have also been improving steadily. However, US economy's inflation rate has continued to trend below 2%, which is a cause of concern. Nonetheless, the Federal Reserve Committee, with a mandate to achieve maximum employment and price stability, expects the inflation rate to rise to 2% over the medium term as the transitory effects of declines in energy and import prices dissipate and the labor market strengthening further. Based on Federal Reserve Committee estimated economic outlook, the projected appropriate monetary policy should see interest rate normalizing in the next few years. The median projection for the federal fund rates rise gradually to nearly 1.5% in late 2016, 2.5% in late 2017, and 3.25% by the end of 2018, close to its longer run normal level. The Fed Committee emphasized that the rate at which the interest rate rises is dependent on the strength of the growth in the economy and the increase in inflation. The US Federal Reserve Committee will likely to continue to raise interest rates should US economy continues to strengthen. In lieu of further increase in interest rates, the US dollar will likely to continue its appreciation. The US dollar index, which is an index of the value of the United States dollar relative to a basket of foreign currencies, including the euro, yen, pound, Canadian dollar, Swedish krona, and Swiss franc, has rose greatly since the start of this year. It has been consolidating in recent months, and it remains to be seen how the trend will develop in the next few months. Generally, any dip in the US dollar presents a possible buying opportunity should the US dollar continue its uptrend in the longer period. We have come to the end of this week's edition of Market Watch. Thank you and stay tuned for more Market Watch videos.